Energy Vault secures $300 million to accelerate 1.5 gigawatt storage buildout. Quick facts: Energy Vault $300 million Asset Vault launch agreement date August 2025, closing expected in 30 to 60 days. Capital raised $300 million as preferred equity, non-dilutive, CapEx enabled, over $1 billion for project development. Project scope: 1.5 gigawatts across US, Australia, and Europe. Operational assets: Cross Trails BESS, 57 megawatts, 114 megawatt hours, Texas. Calistoga Resiliency Center, 8.5 megawatt, 93 megawatt hours, California. Contracted assets: Stony Creek BESS, 125 1.0 gigawatt, New South Wales, under 14-year LTS pipeline, Paitsarjgua 3 gigawatt in global battery storage projects. 100 meta plus annually in 3 to 4 years. Longest offtake term, 14 years. Ownership model: build, own, operate P with self-performed EPC and long-term service agreements. Energy Vault Holdings has entered an exclusivity agreement for a $300 million preferred equity investment to launch Asset Vault, a subsidiary dedicated to developing, owning, and operating grid-scale energy storage projects. The capital, provided by a multi-billion-dollar infrastructure fund, will enable over $1 billion capex for 1.5 gigawatts GW of projects across the US, Australia, and Europe. The investment supports Energy Vault's independent power producer (IPP) build, own, operate strategy and is expected to generate $100 million plus in annual recurring EBITDA within 3 to 4 years from operational and contracted assets. The $300 million investment and the creation of Asset Vault unlock the full potential of our own and operate storage IPP strategy, said Robert Piccone, Chairman and CEO of Energy Vault. By combining long-term contracted revenues with strategic capital and integrated, self-performed project execution, we are well-positioned to scale resilient, mission-critical energy infrastructure to meet the needs driven by renewable penetration and AI-powered data center demand. Portfolio and Pipeline Asset Vault will consolidate Energy Vault's operational and contracted storage projects, backed by long-term offtake agreements. Cross Trails BESS, 57 megawatt, 114 megawatt, Texas. Calistoga Resiliency Center, 8.5 293 megawatt hour, California. Stony Creek BESS, 125 megawatt, 1 gigawatt, New South Wales, Australia, secured under a 14-year long-term energy service agreement, L. The company's pipeline totals 3 gigawatts and 12 plus gigawatt hours of battery energy storage systems across North America, Europe, and Australia, with U.S. projects benefiting from federal investment tax credit incentives. Energy Vault is targeting 15% plus levered IRRs over a 20-year asset life. Strategic context: global demand for grid-scale storage is accelerating as renewables' share of generation grows. Bloomberg NEF projects the energy storage market will exceed 1 terawatt-hour by 2030, driven by policy incentives and grid reliability needs. Energy Vault's technology-agnostic approach, covering energy as a service, project sales, and long-term ownership, positions it to capture value across the storage lifecycle. By self-performing engineering, procurement, and construction (EPC), the company aims to lower capex per kilowatt-hour, reduce operating costs, and create additional cash flows through long-term service agreements. You've been listening to Sustainability Soundbites presented by E+E Leader. For partnership opportunities, reach out to a member of our team.